Get ready for the biggest tech shakeup of the year. The European Commission is preparing to drop a massive tech sovereignty package, and we are diving deep into how this could completely reshape cloud computing access for major players like Amazon, Google, and Microsoft. Officials are discussing serious restrictions on using U.S. cloud providers for sensitive public sector data, and the implications for global tech giants are just beginning to unfold.
Stop using your finger for notes, sketches, and edits. This Jam Jake stylus pen gives your iPad a smoother, more precise writing feel with palm rejection so your hand can rest naturally on the screen. It charges fast, works for hours, and comes with replacement tips. Perfect for school, work, or creative projects. Check the link in the comments to grab it on Amazon.
The pressure is mounting as Microsoft grapples with a massive energy challenge. The company is seriously considering whether to delay or even abandon its ambitious 2030 clean energy pledge, specifically because the rapid build-out of its AI data centers is straining power demands far beyond initial projections. We break down the staggering implications for Microsoft's strategy and the race for reliable, carbon-free power. But the innovation doesn't stop there. We switch gears to the gaming world as we look ahead to Project Helix. Microsoft's Jason Ronald and Chris Charla are hosting an exclusive episode detailing what this next-generation Xbox console means for developers, including a deep dive into the custom AMD-based SoC and the new DirectX tools that will redefine performance and creation. And finally, we check the market. We track the latest moves in Microsoft stock, seeing how institutional investors like XY Planning Network Inc. are adjusting their stakes, alongside analyst ratings that show a mixed outlook. Don't miss out on the full picture of these massive shifts, so stay tuned right here for all your daily snapshots. The European Union is reportedly developing regulations aimed at restricting the use of U.S. cloud providers by member governments for managing sensitive data. The European Commission is preparing its tech sovereignty package, slated for presentation on May 27, which is expected to bolster the bloc's strategic autonomy in critical digital sectors. Discussions within the Commission are focusing on minimizing the exposure of sensitive public sector data to cloud platforms offered by non-EU companies. According to unnamed Commission officials, the main proposal involves identifying sectors that must be hosted on European cloud capacity. This could impact third-country cloud solutions, including those from the U.S. Crucially, the proposed measures would not entirely exclude foreign cloud providers from government contracts. Instead, the restrictions would target their use for processing sensitive data within public sector organizations, contingent upon the classification and sensitivity of the information. The discussions are currently ongoing and have not reached a final conclusion. These regulatory moves are occurring amid heightened scrutiny of major tech giants by the EU. Public sector bodies currently depend heavily on foreign, primarily US-based, cloud providers to handle sensitive information such as health and financial records, provided existing regulations are met. However, concerns have escalated due to the U.S. Cloud Act of 2018, which permits American authorities to access data held by U.S. companies even when stored in Europe. In response, EU governments are actively exploring domestic and open-source alternatives, while increasing investment to enhance digital sovereignty. Geopolitical tensions, particularly strained transatlantic relations during the second term of the Trump administration, are also cited as a potential driver for the EU's shift away from U.S. big tech. This follows statements from President Trump expressing dissatisfaction with Europe and NATO members, including allegations that the EU was violating a trade agreement and announcing potential tariffs on European vehicles. Meanwhile, Amazon, Google, and Microsoft collectively command 70% of the European cloud market in Q4 2025, suggesting that any EU regulatory push could significantly influence their operations. Microsoft is urgently reassessing its ambitious 2030 clean energy goal as the massive expansion of its artificial intelligence data centers is straining existing power strategies. The company is considering delaying or abandoning its 100-100-0 pledge, which aimed to match all electricity consumption with zero-carbon energy every hour of every day by 2030. This hourly target required securing clean power at the exact times and locations of consumption, a feat that annual renewable energy matching does not guarantee. The scale of the challenge has dramatically increased. Microsoft is rapidly expanding data center capacity, with new AI facilities expected to consume multiple gigawatts each, adding approximately 1 gigawatt of capacity every 3 months. This demand is reshaping electricity markets globally, raising significant concerns about grid reliability, power prices, and corporate emissions targets, mirroring the infrastructure race among hyperscalers like Amazon and Alphabet. Industry analysis suggests that current renewable energy alone may be insufficient to meet the firm 24/7 power demands of AI workloads. This gap is reviving interest in natural gas generation as a faster deployment option, while nuclear energy is re-emerging as a core component of the strategy. Microsoft is actively pursuing nuclear-backed power deals, including plans related to restarting a unit at 3 Mile Island, signaling a search for firm, carbon-free electricity. For policymakers, the situation highlights a critical tension. AI growth is testing the synchronization between climate targets, industrial competitiveness, and grid planning. The financial pressure is intensifying, as Microsoft anticipates spending $190 billion this year, with AI infrastructure consuming a growing share of capital. This spending is forcing a scrutiny of sustainability budgets, as the hourly matching goal is deemed increasingly difficult to achieve. Despite the reassessment, Microsoft remains committed to clean energy, having already signed agreements for 1.2 gigawatts of carbon-free projects in Wisconsin. The company is now navigating a complex path, either adopting a hybrid strategy utilizing gas and nuclear in the near term while scaling renewables, or doubling down on clean energy despite higher costs to maintain climate credibility. The decision will be closely watched by investors, who will assess transparency in power procurement and emissions data. Ultimately, Microsoft's strategy will set a precedent for how global technology leaders balance aggressive growth, climate commitments, and energy security in the coming decade. Microsoft is set to release an episode of its game dev channel later today, offering an in-depth look at Project Helix, the company's next-generation Xbox console. Hosted by Jason Ronald and Chris Charla, the episode will serve as a developer-focused refresher, moving beyond general consumer updates. The segment will feature a detailed breakdown of Jason Ronald's keynote speech regarding Project Helix, alongside a fresh overview of the latest developer tools and a recap of the DirectX State of the Union. According to details shared on the Microsoft developer blog, Project Helix is fundamentally shaped by a custom AMD-based system on a chip, SoC, and is co-designed for the next generation of DirectX, solidifying Microsoft's partnership in rendering and simulation technology. For game developers, Project Helix promises significant advancements, offering new avenues to optimize build workflows, boost performance, and enhance iteration efficiency. The episode is expected to air on the Microsoft Game Dev YouTube channel at 9 a.m. PDT, 12 p.m. EDT, or 6 p.m. CEST. For those seeking further discussion, the content is also available on the channel YouTube forums for long-form interaction or the channel YouTube community Discord server for fast-paced conversation. Members of the channel YouTube have access to exclusive content through both platforms. Institutional investor activity shows varied trends in Microsoft Corporation, MSFT stock holdings during the fourth quarter, with several entities increasing their positions. XY Planning Network Inc. significantly reduced its stake, lifting its holdings by 73% and owning 3,034 shares after acquiring 1,280 more, resulting in a holding value of $1,467,000. Other institutional movements include PayPay Securities Corp. Growing its ownership by 22.7% to 173 shares valued at $84,000. MRWM Advisors LLC increasing its stake by 3.2% to 1,909 shares worth $923,000. Farnham Financial LLC boosting its position by 9.9% to 2,269 shares, valued at $1,098,000, and Raise Financial Architecture, Inc., growing its stake by 0.9% to 3,202 shares, valued at $1,548,000. Additionally, DeLarme Wealth Management, Inc., purchased a new stake worth $908,000, and Raise Financial Architecture, Inc., also acquired 29 shares. Collectively, 71.13% of Microsoft stock is currently held by hedge funds and other institutional investors. Trading data for MSFT shows the stock opened at $414.10 on Thursday, sitting near its 50-day moving average of $396.15, and the 200-day moving average of $446.04. The stock has traded within a 12-month range of $356.28 to $555.45. Key company metrics include a market capitalization of $3.08 trillion, a price-to-earnings ratio of 24.65, and a beta of 1.1. Financial health indicators show a current ratio of 1.28, a quick ratio of 1.27, and a low debt-to-equity ratio of 0.08. Microsoft recently reported strong quarterly earnings on April 29th, posting earnings per share of $4.27, surpassing the consensus estimate of $4.06 by 21 cents. Revenue reached $82.89 billion, beating expectations of $81.44 billion, accompanied by a net margin of 39.34% and a return on equity of 31.94%. Revenue demonstrated an 18.3% year-over-year increase. The company also announced a quarterly dividend of 91 cents per share, set to be paid on June 11th, with an ex-dividend date of May 21st, representing an annualized dividend of $3.64 and a yield of 0.9%, alongside a dividend payout ratio of 21.67%. Analyst sentiment remains mixed but leans positive, with one analyst rating the stock a strong buy, 38 assigning a buy rating, and 7 giving a hold rating. The consensus rating from channel YouTube is moderate buy, with an average target price of $562.44. Specific analyst actions include Evercore reducing its price target from $580 to $510 and setting an outperform rating, while Guggenheim reiterated a buy rating with a $586 target. Jefferies Financial Group maintained a buy rating, and Stifel Nicolaus raised its price target to $415 while maintaining a hold. Insider activity included Director John W. Stanton purchasing 5,000 shares on February 18th at an average cost of $397.35 per share, increasing his total holdings to 83,905 shares. Conversely, Executive Vice President Kathleen T. Hogan sold 12,321 shares on March 6th at an average price of $409.52, resulting in an 8.2% decrease in her position. Insider ownership currently stands at 0.03%. Microsoft, headquartered in Redmond, Washington, is a global technology leader developing software, services, and devices across personal computing, productivity suites like Microsoft 365, cloud infrastructure, and enterprise applications.